Hello, ladies and gentlemen. While some questions fill up, if any questions fill up, we will go over what to do while we wait for GME to take off because, there's going to be a lot of periods where it's just doing nothing. And GME can be one of the most profitable stocks when nothing's going on because implied volatility is so high. Me and Justin are playing it different ways. So, Justin, how are you currently doing it?
Gotcha. What I like to do while I kind of wait for the inevitable to happen is I like to, depending upon where I'm at, either sell covered calls. So in this case, if you have shares in tranches of 100, you can basically write calls instead of buying calls. You collect a premium and you basically just make a bet on what you think the stock is going to be at for all intents and purposes. The other option you can do, and I did this past Friday, is I wrote 3 cash secured puts to pick up some more shares. I pretty much target 150, and that's just from me picking up 150 because I like the liquidity there, and I don't really have anything fancy. There's no technical analysis. That's not really my thing. It's just 150 is easy for me to remember. So basically, I write CSPs or covered calls at 150, and my assumption is that GME is probably not going to close exactly at 150. So come next Friday, or this coming Friday, excuse me, I'm either going to be buying GME or selling GME. That is, if my covered calls that I submitted as limited orders this past Friday fill. If GME trades in a channel, I try to sell my covered calls when GME is high in the channel, and I try to sell my CSPs when GME is low in the channel. GME, I think, was low in the channel this past Friday. Sell CSPs. If GME, let's say, bounces back up Monday, Tuesday of this coming week, good time to sell CCs.
So Justin's doing something called the wheel strategy. He wasn't even aware what it was, but basically you have a stock that you want to own. So if you want to own the stock, you're fine selling puts. When you sell a put, you guarantee the right to buy 100 shares at a certain price, and you're going to collect a premium to do so. So Justin's saying, okay, you know what? I'll buy 100 shares of GME at $135. And if GME's above 135, he'll collect a premium for agreeing to buy 100 shares at 135. If it's below 135, then he gets 135 shares. Then what he does is with his 100 shares, he then goes and sells a covered call. This works great if you have a lot of capital. If you can say, write 10 puts and then sell 10 covered calls, I mean, you can be making thousands of dollars a week by doing this. And it works great for Justin. But if you don't have a lot of capital, like if you don't have, I don't know, like what like $25,000 to $50,000 to play with, Justin, it's really, it's hard to really maximize its utility. So what I like to do is something that has a lot more asymmetry, but a slightly more risky, something called Condors, which is just betting that it'll be in that same trading range. So you're essentially betting kind of the same thing, but since GME is so volatile, the market prices it as, at least when I was buying these Condors, I don't know, like 18, 20 days ago, they said, if GME is going to be in between 133 and 148, then you'll get a 15x return. So they were selling them for like 45 cents, and then you would make I think 500 if they came out. I mean, if it was in between that trading range, and it looks like we could fall between that trading range, you'll make potentially 15x your return. Then if it does, I'll probably just roll those off to next month.
Yep.
So
I think, Josh,
that's kind of the different ways that we're playing while we're waiting for these cycles, because right now we're really not expecting much. And there's actually a lot going on with the markets. I mean, Friday, we tanked like 1,000 points on the Dow, which was pretty ridiculous.
yeah. And so, like, what I would say is just, to kind of answer the immediate question, well, back up, of course, do your own research, whatever, right? Not investment advice, et cetera. But like the way, if you've got a decent chunk of capital, it's like 50K or more, doing the wheel, writing CSPs, writing covered calls, probably a good way to kind of play the sideways trading. If you're a little bit more capital constrained, Josh, doing what you're doing, Condors, et cetera, probably a good thing on that front. And let's see.
Yeah, so I'm going to share my screen really quick, and we're going to talk. We'll answer some questions pretty soon, but there's actually something that I really want to talk about. A little bit of some FX vol. So let me share my screen. Can you see it, Justin?
Not yet, Josh. Do you want me to add it?
Throw it up. Throw it up. So we can see that the DXY is over 100 now and up at 101, which is pretty big. If you followed the macro space at all and know Brent Johnson has his dollar milkshake theory, which is basically betting that the dollar is actually going to increase in value and potentially cause some really drastic troubles for the rest of the world, because all the rest of the world runs on dollar denominated debt. There's so much dollar denominated debt out there, and if the dollar spiking is more troublesome to actually service that debt. And right now what we're seeing, I mean, if the USD versus the yen just absolutely cratered. The yen, like basically the theory is that the dollar's the cleanest dirty shirt. And I think FX vol, just currency volatility, is going to really, really pick up over the next few months. Because what are we seeing? The Fed is coming out and saying that they're going to hike rates. They're even going to potentially do a 25 basis points, do some QT, sell bonds. So they're really, really hawkish. But what are these other European and other countries doing? A lot of Europe is keeping rates at zero, not raising rates. Even Canada, I'm pretty sure, came out and was going back to QE. And Japan just said, you know what, I know inflation's running hot, but our debt's so high, we're actually going to cut rates in times of inflation. So we're really seeing the US as being the cleanest dirty shirt right now. And if the dollar continues to gain strength, that is going to cause massive troubles in the financial system, which actually could be good for GME, because the more complex and the less liquidity there is in the markets, the harder it is to do complex short mechanisms.
Yeah, the exotic natures, I think, of the transactions used to archive or to warehouse the short position, it's not going to do well with stuff, being thrown in, stuff out of left field, stuff out of right field. Like, think back to January of last year, when you basically, I would suspect this is what happened, when you had CNS being overwhelmed by people FOMOing in, the system overwhelmed and almost crashed. That's what they had to turn off, or perhaps one of the reasons they had to turn off the buy button, if you want to see that in action there. Also to note, too, that the yen, I didn't check very close that on Friday, but the yen had spiked, or the dollar had appreciated vastly against the yen, suggesting that people are selling their yen to buy dollars. For that, let's see.
Justin, something that you were kind of talking to me about earlier was the potential spikes that we could see going into the OPEX, then into the following cycle, with basically what your plan is for the next few weeks and months.
Yeah, absolutely, Josh. I've got some notes on my phone. Excuse me, I just got them pulled up here. So, the usual hat tip to PieFi. If you're not following PieFi, stop watching this stream and go immediately subscribe to him. He does a weekly members-only stream, which I find to be very, very worthwhile. And Josh, one more second here.
Usually they're free anyway.
Yeah, for the poors, as he would say. Okay, so one of the things, Josh, let me just do some screen driving here. Whenever you see me looking over on this side, it's because I'm looking at the questions.
Justin happens to have 30 monitors.
Not quite, but yeah. So NSCC 801. So PieFi mentioned that, and the takeaway was this, or this was my notes from that. Additional oversight by the NSCC, the National Securities Clearing Corporation, could be bullish if the NSCC can now see that the shorts are being hidden, or more clearly see that the shorts are being hidden from prime brokers and not properly accounted for via margin requirements or whatever. Basically, the NSCC is now put in charge of the way the shorts, shorts deal with the or otherwise get around the CNS obligations. So I think what goes on here, and this is where my understanding really starts to break down, but I think the trading concept would be a total return swap, which is the equivalent of leasing a stock. So you kind of have it's like an IOU, but it's an IOU where you would never take delivery of the underlying, but this transaction is set up so that you would take or receive or have to pay out whatever the change of the value was of the underlying. Hence the total return. That's the return, part right there being swapped out. So it's just kind of a way, I think, to basically say, okay, well, listen, even though we might be short, whatever the equity is, GME or whatever, we still are covered because we have this other agreement over here that even if GME does suddenly spike off, we're covered because the spike will pay out from a contract, and we can use this contract to cover whatever short interest we might have or we might be on the hook for. Again, like I said, I'm really, really weak on the understanding here, but the vibe that I got from PieFi and other people who are far smarter than I was that, no, it's just kind of business as normal. They're just kind of tightening it up, and if anything, giving the NSCC better visibility and insight could be bullish if the NSCC, I don't want to say tightens, but if the NSCC further outlines and then, if not enforces, strongly encourages better margin requirements to be put into effect. Josh?
Yeah, who knows if that will happen.
Yeah.
I haven't looked too deep into it, but right now to me it doesn't seem too big of a deal, just because like it's not really going to change anything that I see on the surface. It's something that I do see with Melvin Capital announcing that they're going to close their fund. It's to me that I don't think that means like if you're short, you have the obligation to deliver that share. If you close your fund, that short is still there. It doesn't just disappear. There's no such thing as if you close down your fund, you're instantly going to be free from all obligations that you had. So they'll still have to manage that position. Whether they can push it off on somebody else, that is entirely possible, but very improbable. So it does seem a little suspect, but I mean they are just getting blown up. Like their longs are getting fucked, their shorts are getting fucked. They're just fucked.
Yeah. And then like right here, Jay comes back and says, it seems suspect to me, which I assume is the Melvin closing it down. So I do not know the intricacies well enough to talk about how the market does this, but I do get the fact that through using, again, the way I describe it is exotic transactions to warehouse a short position, you can kind of like pass off the bag, hide the bag, and call the bag something else. The best example I can think of in recent memory is what happened in 2008 with the subprime mortgage crisis. We had a pile of shit that was transmuted through financial alchemy into something that pension funds and, very conservative investors were buying. The problem is that the thing was just so bad that even the mechanisms that were put in place exceeded the expectations or exceeded the assumptions, which basically caused the collateral supported by these really shitty mortgages to fail. When that failed, it blew up. And the reason it blew up is because people said, okay, listen, we've got this collateral on our books, or perhaps maybe people we do business with have this collateral on their books. And we don't know if it's good. We don't know if it's bad. It might be good. It might be bad. We just don't know. And this is the concept of uncertainty. They're contagion, sneaking into the system. So if you have something similar that's going on right now, where you have a short interest in GME that's been, and again, like this is, I wish I could give you a better example than just black boxing it, but like that's been transmuted, or hidden, transformed, deformed, or whatever, right, into something that's a little less scary. Over here, Josh, do you ever play like Telephone back in the day? Like, the game where like you have to pass something along. I think we're seeing like a financial version of Telephone for whatever the short obligation is, and I probably would say it goes beyond GME with whatever other stocks are in the meme basket. Again, think back to Pi-Fi commenting on this multiple times.
Yeah. Anthony, I've not looked at the auto industry at all, so I have no real edge there. What's up, Anthony? You guys should check out his channel. He has some good content. I really like the explaining for dummies, as we all are very much needed of that. So I have no edge. I've not looked at the auto industry in the slightest bit. Ola, thoughts on RC's tweet? Justin was not on Twitter, but he showed me this. I'm not digging in too deep into any Ola conspiracies. Justin, do you have any thoughts on that?
No, there's been some interesting things, where people have tried to like map out, RC tweets. There probably is a message to it. My suspicion is like, think about RC tweet or Cohen's tweets, and think about like Elon's tweets over the past 2 weeks, considering this Twitter or his bid to supposedly take over Twitter. My assumption is that when you operate at this level, you operate in dimensions that go beyond the law. It shouldn't, of course, work like that, but functionally it does. And so when these people talk, it's not just they're talking to Twitter, but they're probably talking to other people. I don't want to say in code, but like with like a wink and a nod. Know whether they're talking to the good guys, whether they're talking to the bad guys, whether they're making threats, whether they're making deals like that, I don't know. And of why they would use a public forum to discuss a theoretically private matter. Again, I don't have a good answer for that. But I do think, so back up, Josh, here's how I view it. There's probably more to the tweet than meets the surface. So there's probably more to the iceberg than that's just on the surface. But like, if you're asking me to decode it, I think something's there, but I lack the skill to talk about it intelligently.
Yeah, if Melvin blows up, will Morgan Stanley be holding it back? If Melvin's main bank is Morgan Stanley, yes, it would be a trickle up effect, and that's what I think will be very interesting, because it will inevitably be the banks that are sitting on a load of toxic garbage at the end of this.
Yeah, so like, but see, here's the thing that I think you want to think about this is that like, so if Melvin were to blow up, whoever let me see if I get this right. their primary dealer would be on the hook for closing out the transactions. Let's say the primary dealer said, okay, listen, we don't want to be on the hook and we see there's this bag of toxic garbage. And let's say the primary dealer engaged in, I don't know, for example, like a total return swap with maybe, let's say, four other counterparties. And so these four other counterparties are not technically on the hook. And so you have this contagion that's being, rather than having like one party fail, the way that party gets out of, or potentially might get out of, a tight financial spot is by either offsetting the risks to another party, or if they can't do that, putting other parties in jeopardy as well. So that way, when the blow up does happen, it's not just them failing, it's the entire system failing. And if the entire system's going to fail, that probably puts the people at failure who, through their own negligence, are there in the first place in a much better position to negotiate.
Basically, if someone's going down, they would much rather have everyone else going down with them, because then therefore there's a higher probability of them all getting a bailout. So let's say you're sitting on a bag of absolute toxic, let's say you're just overly leveraged these shorts and it just spikes up uncontrollably, you go bust. And if you're banking with, if you'll obviously have an account with a bank, and then your short then gets put on the bank, and then if they're sitting on a bag of toxic garbage, then they're going to just try and get everyone around them as fucked as possible. Because if one bank goes bust, yeah, that's a problem, but not a lot will happen. But if 5 banks go bust, none of them are actually going to go bust.
Yeah, it's the old joke of, if you owe the bank $1 million, you've got a problem. If you owe the bank like $100 billion, the bank has a problem.
Yeah.
So
no, we do not own any AMC. I haven't even I think AMC will do very well, and if there's a squeeze between the two, I think they will both squeeze. But it just all goes down to management at the end of the day. And GME just has better management. GME insiders are buying, AMC insiders are selling. That's really all you need to know.
Yeah, I kind of feel like AMC is, I don't know, but we've talked about it before, and Josh, your views echo my views. I think there'll be some action there, but I don't trust the CEO. I mean, not that I've met Cohen either, but
yeah. They track perfectly. So I mean, they're both going to run. I would suspect, but this is personally just
yeah. Don't we all? Let's see.
I'll read it for you. Do you think if MOAS or anything resembling MOAS happens, will there be an investigation or a toss be about why/how this happened? I want an after action review to reveal what we got right/wrong. Yes, I would say yes, because there's going to be, if this does happen to the extent that we think it will, there'll be so much news around it. It will be the only story that people care about. And every single smart person, they're going to want to figure it out.
The other thing too is that this isn't going to be happening in a vacuum or whatever, right? So one of my big, my formal training's in accounting or whatever, right? So I think in terms
he's the first to admit he's not the best accountant.
Yeah, so don't hold it against me. But what I would say is that what allows the shenanigans to go on, people like to ask when moon. Well, I would argue my answer to the when moon question is when the financial institutions can no longer expand their balance sheets to issue synthetic or IOU GME shares, then the jig's going to be up. Now, I'm sure they have plenty of tricks to keep the party going, but conceptually that's how I think about this in my head. So GME blowing up, if GME does blow up, it's not just GME spiking. I think it's going to be against the backdrop of everything else tanking. And the reason I say that is that if, hedge funds are being liquidated, if banks are having to scramble to sell off assets, whatever assets they can in order to raise capital, if the primes are going bust or risk going bust, or even if, the DFMUs like the DTC, the NSCC, the OCC, whatever, or COMEX, if you follow the metals or whatever, right? If they're having to go in and basically force close transactions, they're going to be selling into weakness. They're going to be selling into panic. And so my point is, I think you're going to see, everyone here must have seen it. It's the box chart where you have, or GME is this black hole sucking in the market to it. So my point though is that what's going to drive the interest isn't necessarily going to be GME mooning. Yes, that'll be interested in whatever the meme stocks are going to be there, but rather it's probably going to be well, wait a minute, why is everything else crashing? Because that's what's going to piss people off. The pain isn't going to come from the GME mooning. The pain that's going to wake people up will come from everything else, particularly with the boomers or whatever, right? everything else going down. This isn't happening in a vacuum, and it's not going to be pretty. Like, I mean, I've said this before and other things, but like, make no mistake, like when this thing does pop off, it does pop off to the way I think it's going to pop off. People will put a gun in their mouth and paint the drapes with their brains. Like
On a happy
people,
note, let's go
yeah,
to
I'm
the
serious.
next
Like,
question.
yeah,
Yeah.
yeah.
It sounds like Melvin was planning to close in June, only to reopen in July. What is the benefit to closing, realizing the fund lost, then hitting
Yeah.
the restart? Well, I think it's more so just like a tactic. So Melvin, I mean, they've just performed horribly. I think they want to change and innovate their strategy to. I think they want to do an all along strategy. I don't know. They just have other shit going on. Justin, do you have any views on them?
No, but again, I think of the iceberg analogy, like the stuff we see on the surface, for everything we see there, I assume there's so much more going on beneath the surface. So my biggest example for that front is think about Mayo Force One flying over to, what is it, Finland or Scandinavia in odd hours.
They park at Finland. So Mail
Yeah.
Force One would park at Finland, walk over to Russia, and then come back.
Well, theoretically, you know.
All right, yeah. Finland happens to be right next to Russia. I don't know many people, Justin. Do you, that just takes an odd trip to Finland at odd hours?
No, but what I'm saying is, what's the old phrase? If it walks like a duck, if it quacks like a duck, it probably is a duck. Like I said this before, but like Kenny, or excuse me, I shouldn't name names.
A certain Mayo enthusiast.
May enthusiasts, yeah. Well, the people who are short or whatever, the people who've been like in doing the everything short and basically theoretically screwing over, or allegedly screwing over the financial markets, like they will probably, if this thing does pop off, they would probably rather be in jail because, number one, like all of America, if not the world, is going to be pissed off and angry for blood. And then you've got like all the or not say mobsters, but you have, remember talking about when you operate at this level, you operate above the law. Think like Epstein being boofed in prison, you know, when he killed himself or whatever. You kind of have the same thing going on. So I suspect, you know, the villains, you know, the Mayo guy, I can't think of a funny name, but there's another person I don't want to name, but he has the same last name as perhaps maybe a prominent figure who's leading a Dallas-based game retailer. But like, I think these people would rather opt to be in prison because they will feel safer in prison than out of prison. So, anyways,
I don't know about that. What percent of the votes do we need to pass for a shared divvy? Justin, do you know? I think it's what do you, I don't know the actual number. I mean, I'm a dummy, and I'll be the first to admit it. I think it would be 50%, like 50.01%. Over anything over 50% is usually a passing vote for anything.
Yeah, I would assume
I would have
50,
to look it up. Like
yeah.
Off my first guess, I would say 50, like over 50%, but I could be wrong.
And if you want to do your own research, the place where you would look on this is that GME, like any public corporation, has got to file the bylaws saying, like, listen, you know, if you want to change the corporate charter, you know, we need to do this. And so what you might see happen, so there might be actually two parts to the question. In order to do the share dividend, that just might be 50%. But in order to amend the corporate charter, this is just as a hypothetical example. I don't know what the answer is, but I think to illustrate the point. To amend the corporate charter to issue more shares, I think they're capped at, what, like 300 million, and they want to raise it to $1 billion or whatever. To do that, they might need, let's say, like a 2/3 vote. Again, you know, just hypothetically. So you might have different thresholds depending upon the amount of surgery that they're trying to do, particularly if it involves corporate governance documents.
Justin, did you go to college?
I did. I went to a school up in Oregon for 2 years, got booted out. I would say I fired them. They would say they fired me. The truth is probably somewhere in the middle. Came back to Houston, finished up here. But I would say that if I had to do it again, I did learn some useful things in school, but I would have been much better off if I took all the money that was allocated to my higher education and went straight into real estate at the time. In hindsight, that's what I would advise myself to do.
What about if you were in today's circumstances?
If you want to do something that's very technical in nature, like you want to be like a petroleum engineer, or, you know, or like a doctor, you know, something where you need like a lot of like technical background, okay, school makes sense. But beyond that, no. Why are people going? I mean, you've seen the videos, or I assume you've seen the videos we've done on school, but like you obligate yourself to debt. That's theoretically, if you can't pay for it out of pocket, to debt that's very hard to discharge, or if not impossible to discharge, with the bet that you're going to get a job. And I don't know, like,
Yeah. If you are really interested in having one of those super core, like, I don't know, like a doctor, or lawyer, something where you really need a degree for it, then yeah. But most things you don't need a degree for. And I am in the situation where I know a lot of extremely powerful business owners. And without a degree, you probably won't be able to work for Morgan Stanley or Disney or any of these massive companies. And if your goal is to work for a super mega massive company, you'll probably need some sort of a degree. But these medium to lower sized businesses who are still making very close to the same amount of money, you definitely won't need a degree for them. And one of these, a lot of the people that I know, they are hiring right out of high school because that's where they see the best product. A lot of the kids coming straight out of high school are some of the best workers that they found.
Yeah, and several things on that front too. Is I would say like when I make hiring and firing decisions on my end, like I typically now look for people who have not yet gone to school. That is higher education. Particularly if you can poach them right out of high school, you can get to them before they get indoctrinated by the system, and that's from a real estate perspective and in terms of that.
All
So
right, what will you be doing during trading halts close because of MOS? Hopefully, I will be taking a flight, getting absolutely hammered, and not looking at my trading account. Justin, what will you be doing? Probably crying of tears of joy, pain, happiness, and sadness all at the same time.
yeah. No. So there's I can take it in a very dirty direction, but let's not go there. I'll say this. I'll say this.
We also need to get there first.
Yeah, absolutely. There's that. And what I would say is, again, like, PyFi did a really good exit or how to exit the position over a squeeze due diligence. If you haven't seen that, by God's, by all means, go and watch that. But probably the biggest question I'm going to have is, okay, GME's in the process of squeezing, but that's only half the battle. So GME squeezes up. It's not happening in a vacuum. What else do I want to rotate into? Like, I still like GME. I have no plans of selling off my entire GME position, but like working in real estate, I want to buy more real estate, but not at today's prices. I also like commodities. But my suspicion is, again, like if GME is shooting up, everything else is shooting down. Josh, did you ever play GTA 5 or, to anyone on the stream, like in GTA 5, the assassination missions? Remember what would happen? Like you would always, for most of them, you would buy one company, write it up, sell it at the peak, and then buy like the competitor when it was at the lowest. Like that's kind of the same thing that I think you want to play here. So I guess the answer to your question is just that what I would probably be doing, assuming I had my exit plan in place and my exit plan made sense. And just to be clear, I think even the best, well, Josh, what's the phrase? Like everyone has a plan until they get punched in the face. I think the MOS events would be the same way.
I don't know. Like we need to get there first, but I think it will be very much so just like staying busy, because if you're sitting there looking at your phone, it's gonna hurt. So is it just me, or does it seem like they're scared to short AMC slash GME? Usually go down 7 to 10% on red days. They seem to be putting their foot on the gas. Predictions for next week. It depends. We're in an environment where, here, let me go back to my screen share, where we look at the S&P. I mean, we were down we were down massively these yesterday, almost at like a few hundred points, almost 1,000. And when you see moves like this, it's going to be a volatile week most likely. And if we see, let's say we gap down on the broad market on Monday, then I would assume GME and AMC go down with it. If the market is tanking, the most likely GME and AMC will drop until something breaks. If something breaks in the system and one of these companies gets a margin call, then we could start to see the divergence between these meme stocks and the market. And BBBY could be what kind of starts it next week. I don't know. Justin, what are your thoughts on this?
Yeah, so I mean, the first thing is we talked about before, whenever like the existing mechanisms, things like CNS get overwhelmed, that's probably, as a PIFA would say, I mean, things are going to get pretty spicy. The second thing that you're going to see happen is that there was that, and assuming the offer is like taken credibly and seriously, who was it that made the tender offer for Bye Bye Baby? Or whatever, right? That's supposedly what kicked off BBBY last week. Actually, Josh, going back to the question, so here's maybe a better answer to this: is like if BBBY, which I've got a very small position in, started like shooting up, I would probably in that particular situation look to allocate the gains back into GME for the most part, and maybe a little bit of commodities, but that would mainly be GME is probably what I would go into. And as far as the point of what's going to happen next week.
Personally, I hope that it stays. I hope it stays in between 133 and 148, as that is where my Condor is. If not, who cares?
Yeah. Oh, gosh. One thing, but I will say this. This is how I play the unknown or whatever, right? Again, I think GME trades in a channel or whatever, right? And so my attitude is that like I already have some covered call orders. They haven't filled yet, of course, but like I have them priced pretty aggressive or pretty high or whatever, right? Because if GME suddenly runs back up to, I don't know, the mid 140s or 150s, whatever, I suspect they'll fill. And then, like I said, if GME comes crashing back down, up, down, whatever, right? Buy more CSPs or close out your covered calls at a profit. Or close out your CSPs at a profit if GME runs up. But the point is that when you're positioned like this, whatever happens in the volatility range, you've got a way to maneuver, or like you've got options in order to take profit.
And the more volatile it gets, the higher the premiums will be, especially on GME. For some reason, well, it's a very good reason, the GME profitability on volatility is extraordinarily high. So when we see these volatile events, there will be premium to sus to get out. Josh, would I invest in GME if not for MOS potential? 0%. But before I got into GME, Justin would have called me probably the biggest boomer in the world. I only like extremely deep value. Like I don't really buy anything above like a 5 PE, unless it's something like uranium that I think has massive asymmetry. But I really only buy extraordinarily deep value.
Yeah. Oh, so this one right here, Josh. So this is actually what I would be doing during trading halts. Like I'd either be playing Pillars of Eternity or Deus Ex during trading halts. But then again,
I don't play video games, but I do like chess. And that's pretty much what I'll like my favorite game right now. Let's see.
Did we miss? Let's see. Tesla. Oh,
Tesla. I really wanted to put on a short after earnings. They gapped up 10%. I wanted to short so bad, and I still want to, but I'm not going to because it's so expensive. I think that they're going to go down. But I didn't short, and I know I'm going to regret it because since I didn't pull a trigger, I'm sure it's going to happen. But the premiums on puts are just ridiculous. I mean, I would have had to buy like a few months out at the money contract. It was like $15,000-$20,000, and I was just like, screw this.
Yeah.
So
and the way I put. And the way I play Tesla is that last year I picked up an order to buy 2 Model X's for delivery this year. And since then, like, the delivery price has already gone up, but Tesla locks it in. So like I'll play Tesla, but like I play it like on the commodity side. Like I sell me the car and then, back up. I can't say that I'll flip it because you're not supposed to do that. But the point is I'll take delivery of the vehicle and then, I'll just kind of, see what my options are. Maybe I drive it, maybe I give it to a friend, whatever. So
yeah, Justin is the essential Moody the Millennial driving the Tesla and
drinking to Starbucks.
I do sadly suck at chess, but that's why I play. So I play to get better. It doesn't seem like there's any more questions. So.
Oh, hold on. There are a few things. So in this particular case, like the consultants, BCG, the McKenzies, just management consultants are.
Anyways. Businesses. Yeah. All right. Well, we don't want to bore you guys anymore. Justin, do you have any
Yeah, okay. Justin, I'll rotate into S&P 500 post MOAS. Okay, yeah, I know it makes sense. Like, see, so here's my thing on this thing of bipolar bear. Like, I make the argument. So I've got some bros at the gym who are very much into crypto, and they're really good at it. And like they're advanced enough to get the concept that they want to have a crypto stable bag. So they use USDC or whatever. Obviously, they stay the hell away from Tether, which I completely agree with that. So they get the first part right, but I don't necessarily think they get the second part right in the sense that it's like, listen, it's the same thing with the stock market guys. Like if you take let's say you want to take some risk off the table and you dump cash in like a money market fund or whatever, right? Okay, great. You've gotten the first part right. But when shit hits the fan, what's going to happen is the system's going to freeze up. So in the crypto world, this means that, the Coinbases, the Krakens go down, or if you're on a DEX, good luck trying to get your transaction to go through. You'll be paying $300, $400, $500 in ETH gas fees, and that's assuming the transaction, again, goes through in the first place. Rickard makes the comment that you're going to see the system freeze up. They'll lock everything in place. And so you'll be able to see your money, but you won't be able to touch your money. And so my comment into this front is that I want to basically pull winnings GME gains, that is, for the most part, completely out of the equity market until things calm back down. Now, I might do some, rotations, but pretty much the first thing I'll be running to is the first thing I think that's going to fail and break, and that's, buying physical precious metals. I've got some pretty deep contracts with, or pretty deep relationships with suppliers. But if you think back to what happened in 2020, and Josh, you were there in the front row seat when you saw this happen too. The precious metal dealers, you actually want to buy physical gold, platinum, silver, whatever. These are the first things to go offline, and or at least you saw that back in 2020. I think you're going to see that again happen when the shit hits the fan. But the key is that I want to get a sizable chunk, although not 100%, completely out of the equity market and really completely out of the banking system. So that's probably what would drive my thinking on that front.
Yeah, I would definitely pick up a lot of metals, and there's a lot of deep value sectors that I like. There's actually, I really like this question. Do you guys hear the news about the FBI warning about food processors being targeted for cyber attacks? If you guys didn't see our video that we did earlier, I think it is actually really important, not GME related, but it's about this food potential shortage. Might I add, there's been at least 12 food processing plants that have been blown up or in mysterious ways destroyed over the past few weeks. 2 of them have been by plane crashes, which is very odd, as Justin flies more than mostly humans on Earth. Used to fly more than any human on Earth. He knows that planes don't just go down,
fall out of the sky. Yeah.
And if let's say Rocket and Al Hood, if the FBI is warning about a mysterious cyber attack on food processing plants, I would be very eerie about what they are saying. And I think it very well could happen. We also have seen Klaus and his elite cronies coming out for the past few years saying a cyber attack could be one of the greatest threats to society.
A cyber attack is the next great threat that we must face in the era of the coronavirus.
Yeah.
Damn it.
Well, actually, socks can theoretically go to infinity.
There's another buddy who I've got a small side bet with involving a phone number, and much to his horror, I think he's going to realize that it will hit phone number territory. But let's not get ahead on.
I'm not that buddy. But I hope it does.
No. You know who it is, though. You know who it is. But
let's see. Elon or Bezos? I would say Elon. White or wheat? White. Ford or Chevy? Ford. Fox or Newsmax? I don't know what Newsmax is. I don't like any.
Newsmax. 100% Newsmax.
All right. Well, I'll take Justin's price there. Nice to see you too, Phil C. I have not picked up anything. I have my Condors expiring next week. My puts on the SPY are up a little bit too much, so I'm gonna manage them next week. I'll probably sell a few and see what we're looking like. Yeah, I do like the UVX.
Yeah. Okay. So one of the things. So this is actually really a concept right here. So when it comes to trading crypto, the only crypto I really like, or backup, I find crypto interesting. I think crypto is the future. I'm not trying to take anything away from crypto, just to be clear. But the only crypto I actually have a position in that I consider, material is XRP. And then there's a sub part of XRP where you can, built into the XRP ledger itself is a DEX. And so I like to trade on that. There's not a lot of liquidity compared to some of the other DEXs out there, compared to most of the other DEXs out there. And it's odd to find dollar or euro equivalents, but I find that to be the best answer to the question in terms of where do I want to store dollar value in crypto land for trading there. So
Bipolar Bear, I love your live streams. Please consider a 24-hour live stream in the near future. Justin, how about this? If we get to
seek help. Thank you. Oh God.
If we get to 10,000 subscribers, how about we do a 24-hour live stream? Are you down for that, Justin?
Yeah, I'll say that. Or back up, maybe when moons. Yeah, when it moons or whatever.
When moon, here, but either when moon or when we get to 10,000 subscribers, we'll give it a go, because we'd like it to be pretty lively, so we could actually have some stuff to do. We could find some guests to come on. Maybe I could get Mr. Gammon. I don't like to bother him with this nonsense though. So,
like I said, Gammon will care. Gammon will care.
We'll either do a 24-hour. Oh, God, that just sounds brutal. Because I like my beauty rest.
That's what we do. When the Moas, Josh, will you publicly commit to shaving your hair, completely? No. Come on.
No,
really?
I got.
It's not going to happen until you do it. Where's the? I've got the. Oh, here it is, right here. Hold on.
Yeah, I sent Justin a wig because he loves commenting on my hair and his bald head. So, did you guys see Rogan making fun of Klaus on his podcast? They kept showing Klaus in weird superhero clothes.
Yeah.
I did not actually see that, but Rogan's a funny dude, and Klaus, he deserves to he puts this shit on himself. I mean, he is the creepiest.
He's a Rothschild. They keep it really hidden. You're
He's
not supposed
one
to
of the
know that,
creepiest
but
fucking dudes around. Stock market crash after midterms. I don't know, because I think we'll probably see some food shortages before midterms, and if there's food shortages, people will not be buying stocks. So I think there's a real risk of a, I don't know, a crash, but we're already in bear market territory. The Nasdaq's down over 30%. I'm pretty sure the S&P's right there. Almost all of these high tech stocks are down over 60%. The only things really holding up right now are the FANGs, and Netflix just tanked. So it looks like a lot of these stocks are starting to roll over. So there's a very decent chance that we start to see some real negative momentum in the coming weeks, especially the Fed's coming out saying that they're potentially going to do QT even more, even maybe a 75 basis point hike. Eventually the market just can't take that, or the Dixie could start this. If the Dixie continues to like rise uncontrollably, I think we'll probably see a crash as well. Justin's smiling and giggling because this is going to be the new FANG. It's going to be fag. Ha ha ha. Justin, you're so mature for your age.
thank you, Wall Street Bets. I still push all the buttons on the elevator. I never grew out of that phase. Anyways, let's see. Josh, here's one for you. Fertilizer.
Yeah. Funny enough, I was max long fertilizer back in 2020 when I got my portfolio. I was like Chris McIntosh, who is one of my, I think one of the greatest forecasters in the world. He was talking about this and the potential food shortage that we would see in the coming years. So I was extremely long fertilizer. I owned everything calls, super long, and I thought that we would see some sort like food price increases, especially with fertilizer, but I sold prematurely. I own almost nothing now, and I missed the parabolic move. I lost it all. But what I am doing, I am no longer trying to profit off the fertilizer shortage, but I'm preparing, and I think we're potentially going to see massive food shortages. And if we have food shortages, it doesn't matter if you're making money. You need food on the table. So what I'm doing is stocking up on actual food. Tomorrow again, I'm going to go to the grocery store and get a bunch of just canned goods and things that will last a few years. I know All Nighter Hider, if he's in the chat, he's actually going to Alaska and he's going to be getting a year's worth of salmon, probably freezing it. So that's really, really cool. I think that's a great idea.
That's probably a cheaper idea than what I'm planning on doing too. So yeah, no,
Justin's cat is going to be living more luxurious than any human on Earth.
Yeah, no, like my go-to to put in a storage of meat is acorn-fed Iberico ham or Iberico hamon, but that's neither here nor there.
If you go to Justin's house, he'll have fine champagne, caviar, honeybee cones, and Iberico ham.
Yeah. Netflix tanked due to BCG. Well, I think they're tanking because they're making woke shit that nobody wants to watch, but that's just my take on it. Do you think it's...
Wait, 1 second. We need to go in order. Come on, Justin. Get your head in the game. Well, except for this one. We'll skip right over this. Josh, are you afraid of another buy button incident or something similar when MOAS happens? Yes and no. It's all up in the air. I mean, we need MOAS to happen first. I don't know. Justin, what do you think? It's harder to do something twice because all eyes are going to be on it. When the government or someone pulls a maneuver, fool me once, okay, but fool me twice, that's going to be very difficult to slide, especially if there's big eyes on it. We see a lot of these massive names with a lot of power that have been hinting at something like this, or that if something like this were to happen, they would call BS on the system.
The way I would articulate it is the mask slipped off just enough for the general public to kind of look at what was going on. Like, there's a good friend that Josh and I both know who works for the IRS, and very conservative, very very level-headed. Is the way we describe him. Very, very level-headed. And even he was like, I mean, he doesn't really care about GB one way or the other, but even he was like, it's just like, even I'm like looking. That is him speaking, saying, I'm looking at this and like, even they are just like, they're not even trying anymore. Like, they are being way too careless because the average person is going to see through that the game is rigged against the average person. So they can do it once. If they do it twice, here's the thing. I'm not saying they can't do it again, but if they do it again, like, it's going to be much trickier. And the other thing too is if it happens against the backdrop of everything else tanking, the general public's going to be pissed. So that's kind of this wild card throughout all of this.
All right, Netflix tanking due to BCG. I don't know. Possibly. I don't personally think so because Netflix, they came out and said that they lost 2 million subscribers. That would, I mean, they've been gaining subscribers this whole time. Then they come out and say that they lost 2 million. That's gonna cause a stock to tank. As well as I do like. I'm pretty sure Melvin and I know Citadel owns quite a bit of it, and they're gonna take a huge haircut on that. And then we saw BBBY spike right after that. A lot of weird things building up under the abyss. I'm all for MOAS, but do you, Justin, think it is possible with a looming recession? Everything is getting crushed in Wall Street. I'll take this right away. Then you think about your thoughts. Macro trumps everything. And if you were investing in real estate in 2006, 2007, you could have the best location. You could have a prime A house or property in the best location possible, best deal, anything. But if you don't understand the macro behind it, and the macro states that all property is going to tank, it doesn't matter what location or what homework you've done, the macro will trump whatever, like all of that. Same thing will happen. The stocks are, if all stocks are going to go down, GME is going to go down as well. It will happen unless there's something that breaks. If there's a margin call by one of the shorts, or some financial instability happens, which makes it so they can not continuously support their balance sheet. So there would have to be some sort of event that causes them to have some troubles, I think.
Yeah. So what I would say is this, macro will trump micro, but geopolitics will trump macro. And see, the thing is, like, the everything short getting resolved is going to go far beyond the realm of the markets, far beyond real estate, macro, crypto, and all this. I mean, this will be part of what will happen, but it's going to go beyond this world. And I guess, like, the way I think about it is I think about it like this. If you have a massive bubble in asset prices that's going to get popped, that suggests deflation. Asset prices will go down. That is a fancy way of saying real estate prices will come down, stock values will come down, or whatever, right? And that's not going to be pleasant for anyone. But at the same time, you have these geopolitical tensions, or these geopolitical, like, plates that are grinding against each other. And one of them might be if you have foreign central banks dumping a material portion of the U.S. treasuries to buy something else because they want to diversify out of U.S. dollars as a world reserve currency. This will mean dollars or treasuries that are held offshore will come back onshore. The other thing is that if you have foreigners, so think back to what we were talking about when we first started, where you have foreigners seeking to come back to the cleanest dirty shirt. They want to buy into dollars, or probably more accurately, they want to buy into dollar-denominated assets. This will actually cause inflation at the same time. And so I don't know which is going to prevail. I mean, I think it's going to be incredibly choppy, but it's really hard for me to answer that because I see it as there's too many cross currents that are competing.
Justin, when moon.
Sometime between now and the eventual heat death of the universe. Oh, I will say this, and this is just me pulling out of my ass. I suspect, because this isn't going to happen without the elites giving it its formal blessing, or the elites will do everything they can to roll back up. My guess is, or back up here, Josh, here, do this. If it happens one day, plus or minus of a full moon, then your hair, because, like, that's what I think is going to happen. There's going to be there's some lunar tie into this. That's my guess, but that's just me.
Not happening. I can't afford to make these kind of bets. Do you guys talk about GME with our friends or family? Kind of. Justin probably more so than me.
Oh, my family doesn't talk to me anymore. I talk to the cat about it all the time. Yeah.
He'll talk about it with his friends. He pitched it on me. I was an anti-GMEer for a long time. Plus probably hears more GME than any human on earth, and probably not for the best.
Yeah.
So, Miguel, do you talk to GME with your friends and family? Sometimes, no. I would say not really, but once in a while. Any Canadian potash companies you guys are looking at? I think I had Nutrien, Mosaic, CL. I'm not sure if those are potash, but those are some of the fertilizer companies. Like I was just buying the ETFs, just keeping it stupid simple, because if you can get leverage on these blue chips or ETFs pretty easily.
Ain't that the truth? Yeah, ain't that the truth too? So, yeah. We're
Let's
all
see
thinking
what's
it, Anthony. We're all thinking it. Oh, what's happening with LME? I haven't heard of anything in particular that's going on there, but I would say like LME and CME are kind of in the same position where you're going to have, if there is a massive, if people refuse to cash settle their IOU, their paper commodities, and that they demand delivery of the real thing, all the exchanges that are short, or back up. If there's not enough commodities, there's just simply not enough commodities. I don't know what the end game is going to be on that front, but my suspicion is that, or I would not be surprised to see a default event, or if not a default event, like COMEX and the other DFMUs that deal with commodities, or their foreign counterparts like the LME, declare force majeure and just force settle people in cash. I mean, I would not at all be surprised to see that. So,
what's up, Gabriel? Oh God, I don't see anything else. So again, you guys are talking about some of the fertilizer companies in the chat, and one thing from let me see, do I have a book right here? Yes, from Reminiscence of a Stock Operator. One of the most important parts of this book is when he talks about getting out in a bull market. I had a ton of these fertilizer companies, and I was really long. But when you're long in a scenario and it just continues to rip, and you get out of your position, what happens when it doubles from there? It is, you have to, in a bull market, you want to hold. And that is something that I really failed to do, and a lesson that I've learned. Something again with coal, a BTU, a ticker that I've had for way too long. You buy it at like $3 and it goes to like 23. It's hard to hold on to. Luckily, I've held on to it. But the hardest thing is when you buy something low and then sell it at a medium price, but it continues to run higher. So keeping a small position in something, even if it's just like 1 or 2 shares, but something that you're long-term bullish on, keeping at least a small position is very wise. And if you look at it from the Reminiscence of a Stock Operator, they will he'll put it in way more elegantly than I.
Yeah. Oh,
Fuck.
sorry. Yeah, so I think there's an author I really like named George Friedman, and the way he describes it is right now the fundamental problem we've got is that a great deal of capital is seeking and not finding investment yield. And so you've got the boomers on the cusp of retirement or in retirement, just starting retirement, who've prudently saved, who need yield, but with inflation running at 8.5 officially, and nothing really paying yield, like it's a big problem. And so like conceptually, what has to happen is this: like the wealth that's been accumulated by the boomers and maybe the Gen Xers, maybe the boomers, has to be like transferred to like the millennials and the Zoomers. And the reason it has to be transferred down is because the Zoomers and the millennials need the capital to go through and rebuild the physical world. And at the same time, in return for the capital, they need to pay a dividend or pay interest on the capital they receive back up to the boomers to support them in retirement. Like it's all very Zen, I would say the system's working exactly the way it's supposed to be working. But right now, there's this cog, or there's like a wrench in the cog that would otherwise cause this to happen, and so you get these really weird malinvestments that go on. But that's how I see it, high level.
We go Triangle Live once a week on Sundays, just for fun. It's definitely not going to help the algorithm, because YouTube is just an algorithm, and we are playing with your minds when we make these videos. So be aware. In your portfolios, are you holding cash position? Slightly. What I do is I have a long volatility portfolio. So if any of you guys are not aware of Chris Cole, you have to read The Allegory of the Hawk and Serpent. Weird name, but it is free on the internet. I think Chris Cole's had more of an impact on my market thinking than anyone else on the world. So instead of cash is a speculative investment. When it's going down 8% a year, the only time when it's really viable to hold for long durations is when you think there could be instability in the market. So because of that, I think that we are in a time where there's some instability in the market, and I have some cash, but mainly I have a long volatility, which is just things that are negatively correlated to the market. So if the market is going down, you have something that will go up during that time. For me, that is usually just in the form of puts on different companies going out different time horizons. Mine, just keep it simple, stupid. I have right now quite a few SPY puts. So as the market's tanking and all my longs are going down, that gets slightly offset by my SPY puts skyrocketing, especially on a day like Friday where we see 1,000-point drop, and all my other, you're still down on the day, but not as much as you otherwise would be.
Yeah, and Phil, the other thing is this too. It's like, okay, yeah, cash might be burning away to 8.5% year, but it's just like a call option. Like Rickards makes the comment, cash is a call option on a potential deal that you might have. Like if the market tanks, well, you'll be glad you're in cash because you'll be able to pick up things at a bargain. And if you have to pay 8.5%, in terms of inflation, loss of purchasing power, that's what you have to pay. So let's see.
Oh wow, are you guys in lockdown again, Gabriel? Is London in lockdown? Wow. I was not aware of that. Yeah, my thoughts on USD coin, that is a shit coin, but my favorite shit coin. So, Josh, where did all the employees go? Many industries are struggling to find workers, from fast food to accounting. Yes, so I think this started in March of 2020 with all the stimulus checks. People had more money. They simply did. I did. I was just working a regular job at the time. I think I was a junior in high school, and I don't know how it happened, but I don't know, maybe I was making $500 every 2 weeks working as a lifeguard. And then once unemployment came out, I was making like 600 every week. So I was making more money than I ever had. And you were getting stimulus. So someone that was just making minimum wage their incomes were just skyrocketing. And then we saw all asset classes skyrocketing. So if you were somebody, let's say a boomer or a millennial who jumped into the stock market or into some of these Shina Ibu cryptos, you were making just ridiculous amounts of money. You were making more money than you could ever make at work. So a lot of people had the opportunity to retire. I know a lot of people who retired during this time, as well as a lot of kids who were making so much money, I don't know, from trading crypto or stocks, that they didn't have to work. So that's going to cause this worker shortage. And then, Justin, what are your thoughts?
Yeah, no, like pretty much like the thing is like, I think people will work for I think for two reasons. They have to work. In other words, they need cash, whatever, right? They're compelled to work, or they want to work. They're doing something they otherwise would do for free, and they just have to be paid for doing it because they like doing it. So that being said, if people don't need cash because they already have cash, or they have purchasing power that's been created through something else, then okay, well that means the only reason they would go to work is because they like to work or they like what they're doing. And if they don't like what they're doing, why on earth would they go in if they don't need the money? So Bipolar Bear mentioned this comment too, financial independence, retire early. Well, bam, there you go. I've got a good friend's sister. She was an accountant, did very well, estate tax, and she quit 3 times, or she quit 2 times, and the firm bought her back. They said we'll just give you more money, and then by time number 3, her attitude was like, listen, I just want to be a mom, just let me out, keep your damn money, and in that particular case, she didn't want to do it. She married very well. And so she was able to do that. But that's the key thing about the financial independence. For me, it was real estate. Josh, for you, it might be passive, or the dividend payments or whatever coming through that.
Humbling, to say the least. Great content, questionable, but thank you nonetheless. And when will the next video be? We actually did not record one today because we're doing a live stream, so there won't be one out tomorrow, but we'll record one tomorrow, send to the editors. Maybe we do a live stream tomorrow night if there's something interesting going on. I'm not sure. Earnings this week, I think it depends. I think they'll probably be on the bad side, so I'm not playing any straddles. I'm not really. The only earning that I'm really following are shipping, and those are super boring right now. And I'm not looking into any of these stocks earning. I still have SPY puts, not playing straddles on anything. I mainly stay in my lane, and my lane are these deep value oriented stocks. I go off it to get my long volatility every now and then because I need to maintain a long vol portfolio. But I'm not playing anything this week. I know Justin isn't either. He's
no GME and BBBY is what I focus on. Honestly, I said this before, I'll say it again, Josh is the markets guy. My attitude is I find GME amusing. See, they were back to it. The reason I dabble in it, well, I guess money, which is always nice, but I just find it amusing. It captures my interest. So that's what I do.
Why aren't people yielding stable coins like Gemini Dollar, USDC, who just bought out by BlackRock? It can help you deploy if you need to wire out stocks for crypto.
So if you're in USC, if I had to be in a stable, there are 2 stables that I like. USDC, if I had to be on, was an ERC20 or back up. If I had to be in a mainstay stable coin, USDC would be my first choice. But that being said, the stable I like to be in is actually It's a token issued directly on the XRP ledger by Bitstamp, and Bitstamp will issue like a dollar equivalent. You can trade XRP and other like IOUs, like Bitcoin, Ethereum, or whatever, right? Directly on the XRPL, and so like that's my personal preference. But again, that's much smaller than the deep liquidity that I would assume that Circle would have from USDC. But yeah, good, very very fair point.
Speaking of SPY dropping, do you think it will keep dropping or rallying the next week or two? I don't know. Looking at 2 weeks, I'm not sure. I will note that the strongest rallies come during bear markets. Kevin Muir, I always mention this every single time. He did it. He went back and looked at the strongest like 1 or 2 week rallies of the S&P history, in virtually not every single one, but the vast majority came during bear markets, because option dealer makers are positioned in certain ways to have these snapback rallies. Just like when we would see during these bull runs, there would be a massive drop, then going right back up. It's the same thing happens when we're going down. We have a quick rally up, then following back down. So I would not be surprised if we, I don't know, have a few red days next week, and then the week after just have a quick rally. I don't know. I cannot forecast the next week. I don't know.
Yeah, I mean, the only thing I could say is, I mean, this is just, from, watching PiFi this past week and today, like, we are probably still a little far out for OPEX in May, definitely way too far out for OPEX, or backup, of course, we're too far out for OPEX in May, but, like, I don't think you'll see any GME action until maybe, like, the third week of May, and then depending upon whatever happens, of how they announce the stock dividend, if they pre-announce a stock dividend, or they do one stock dividend prior to the meeting, then after the meeting, okay, there might be some shenanigans going on from that, but I guess my attitude is just kind of wait and see, is how I view it.
And I don't really try and predict. That's the great part about long volatility. It doesn't matter. I go out of like many months. I'm right now towards September and August for my SPY puts. I might roll those if we start to tank a little bit next week too. But I'll always hold some sort of short position. Are we both on Twitter? Great question, Gabriel. Wow, what a timely question, because I actually just created a Macro After Dark Twitter. Justin, I don't think he'll be on that because he's a Twitter hater.
Social media in general, like, no, just no Facebook, none of that nonsense. No.
Justin's on some of the alternative platforms. Let me see. I'm not on. Let's see. I think I just sent a Twitter link. But I just opened it. We have 0 followers, and that is probably how it will stay. I'll try and tweet if we get some engagement. I'll start trying to be active, or maybe I'll even have Justin get out there. I think I just named it Macro After Dark. So yeah. Would Justin, would you accept USDC as payment for MOAS?
The answer is yes, because I see USDC as the most fungible, because I would accept it, then I turn around and immediately would spend it, is what I would do. I would seek to buy metals from it. So the answer is, if I have to accept crypto, that would be probably my first choice of crypto to accept, not necessarily because I like USD, or backup. I do like USDC, but it's not because I want to hold USDC. It's because I see it as giving me the most optionality to pivot and move into what I really want. Again, my assumption would be metals.
When merch store, the last person you want in charge of a merch store would be Justin. He wears the same outfits every day forever, and he doesn't even wash them. He'll just throw them out and buy new ones. So that is Justin. We will get it eventually. I can assure you on that. Kind of like PiFi when he says, "When moon?" I don't know, but that is the same. What do you guys think is more probable? Market crash due to current world events, or do you think a black swan on the horizon that the world economy cannot digest is on its current fragile state? I think there's so many different cross currents. Justin, you'll take this in a second, but I can assure you, if we see the Dixie get up to 110, 120, 130 in a controllable spike upwards, I don't know if that wouldn't be a black swan event, but it would certainly be an event that puts the current financial system on its knees and praying for daddy.
So what I would say, first off, that is a very good question. Like, I can't do it justice to answer it here, but I would say this. Read these 2 books. The first one is called The Fourth Turning. It's a relatively quick read, or get it on Audible or whatever, right? It'll be well with your time. The second one is going to be George Friedman's The Storm Before the Calm, particularly starting around chapter 5 or so, when he talks about he identifies 2 cycles. Because, you see, it's not so much just the market going up or the market go down or some like major crash, but like we have to go through this financial event. Yeah, it's not. Yeah, you've got, the financial event is painful enough, but there's also, let's say, like a philosophical event we've got to go through. There's a religion. I mean, like there's many events that are coalescing at the same time. Financial is by all means important and a major thing, but it's not the only major thing that's happening. So what I would suggest is read those two books. Those will give you a really, really good lens to not just look at the economic question, which is I think what you're asking for, but it'll give you the context to kind of know the story behind the story. And that I think will be much more valuable than me trying to poorly describe it. But those are the two things I'd recommend.
Maybe we can kind of do a video on that, because if we can prepare, we could definitely get some good thoughts. Off topic, but how many editors would you recommend for a YouTube video? Currently, we have 2. Justin, just mute yourself while you're typing. I'll mute you for you. So we have 2 editors. Basically what we'll do is we'll have one editor do an edit through, and then they'll send it to the next editor, and that editor will do a second edit through. Basically, the goal is to have as much B-roll as possible, because what are all the algorithms looking for? They're looking for audience retention, and the longer somebody is watching a video, the more they're going to push that video to more and more people. The way you keep people watching is through a lot of cuts and things that make them force attention. A live stream like this is actually horrible for viewer retention, because there's no instant cut. There's a bunch of long pauses. It's just really for fun. So basically you want as many cuts as possible, and cuts that are meaningful at least. Ooh, you're still typing, Justin? Shit. Oh wow, the chat is pumping. Are your DMs open on Twitter? I think so. I just opened it. I would assume that they are, unless you have to turn that on manually. So I'm gonna assume yes. If not, I will figure that out after the stream.
Yeah, that's a Josh question, not a Justin question.
Yeah, Justin will not be too active on the Twitter. I will get him out there eventually, though. Oh, Justin, he will buy. I can assure you, you do not want to buy his old shirt.
No, you don't know this. Like, I refuse. So where I'm in right now is I sold my old home, which was it came through an inheritance. Which big home, really like living there, but it's just way too much space. The home I'm in right now, I'm grateful to live here, but like I don't want to live here long term, and I refuse to unbox anything. Like,
you won't even unbox it. Yeah. So when I went down to Houston, he just had boxes everywhere. Just like he moved in, but he didn't actually move in. He has all his boxes just laying around.
Yeah. The reason the green screen and all this stuff is back here is so like you don't see the pile of mess that's behind me
of human excrement. I'm just kidding. Yeah. It's not actually that bad. We are exaggerating. Let's see. Are we? I'm sure PyFi. Honestly, we'll probably be in PyFi's chat watching him stream the shareholder meetings, as he is much brighter than us.
Yeah, like again, like if you're not following PyFi, like by all means, like if you only follow us or PyFi, follow PyFi. Like don't waste your time here. Like I can't like. And the other thing too is it's like or backup. I would argue probably the best endorsement I've seen for PyFi is the shadow banning and the censorship put on by YouTube of that. As they say, you have the heaviest flack over the target.
Shadow banning that's not actually happening.
Oh, it's not. Oh. Okay, there you go.
Well, it's because you're just looking at the algorithm. The algorithm does not like PyFi. Like in fact, you would hate the algorithm's worst enemy is PyFi. Someone who streams for 8 hours a day and has no B-roll, has long pauses. Because Justin, the goal is to retain attention. What are you doing when you're making a live stream? And people are clicking on, clicking off. They're not watching it throughout, so it's terrible for the algorithm. It's not going to push it out to more and more people. Therefore, if the problem is that PyFi does not follow the algorithm go.
Well, see, but here's my argument. It's like the stuff that he makes
on YouTube.
Yeah. Well, see, that's like PyFi's talking about
because we're fans. But I'm telling you, YouTube itself does not like PyFi. So, sorry, PyFi, but YouTube doesn't like you. Well, shit. I think that's. I don't think we can swear on YouTube. But we might have to stop eventually, because if they get angry on us. We had one of our videos removed back in the day, and remember when we first started, we talked about things apparently YouTube doesn't like a lot of.
It was an anti-parasitic drug, which I will not say.
Oh, Justin, thank you. I'm a big fan of your content. Thank you, man.
That's a better looking Justin than me. Good job, Justin.
Justin, whatever I do, please keep your hair. There can't be 2 bald Justins out here.
Yeah.
Yeah, I'm
Yeah.
telling you, they'll ban you if, and the problem is when you're a small channel, if you get banned, there's nothing you can do. If you have a big platform, you can kind of stretch the line of content, but YouTube does not like, they get very angry when you talk about things that are against the consensus monster. And eventually, I'm sure that we will get banned. How many
Oh yeah.
I'm not a Lambo guy per se, but I do have a Bugatti on my shopping list. Justin,
Don't
Justin's
say it. Don't say it. Don't say it. Don't say it.
Justin's form of travel will probably happen through a private jet or a giga yacht, and if he has to get to the giga yacht, maybe a helicopter on the giga yacht. Of course. So,
Uh, um, Yeah, like it has to happen first. Like honestly, the big problem is going to be like if you're playing a video game, like up until MOAS and through MOAS, it's just like the intro. Because the thing is like once this happens, and you have this massive like this theoretical massive wealth transfer, like the millennials and the Zoomers, and I guess any Gen Xers that are in on it, like they're going to have to put the world back together. Like they're going to have to re-envision and rebuild these companies. And like don't get me wrong, like I think we'll rise to the challenge. I think it'll be worthwhile. But like just don't think like or back up, you can only do so much cocaine, so many hookers or whatever, right? In like a set period of time, and then you've got to go do something else or whatever, right? And I think to find meaning, people are going to, or at least the millennials and the Zoomers are going to find meaning in putting the world or putting the world back together. I'll just say it like that. So,
what are your thoughts on Meet Kevin, Justin?
Actually, I don't know that much about it. So typically when it comes to,
yeah, I've watched a little bit of Meet Kevin. Not my style. I like people who really get into the weeds. Meet Kevin's very much a millennial, and he portrays that very good. And he is invested in things that I don't really like. He follows the consensus, but he's a YouTube genius. As a realtor, Justin, I'm pretty sure all his properties are in California. That is, I think that says enough for itself. He's probably had massive price appreciation. I don't know what he's doing. We don't follow him. I know Justin would not follow him. He's a smart guy. I think, as Rick Rule says, he went broke when he was young, and I think a lot of people when they will go broke when they're young. But it is very like you'll bounce back. He's someone who would very much bounce back.
Yeah. What are your thoughts on uranium? I've got some thoughts on this, and this is a hat tip to Mr. Rick Rule. What I'd like to do, I can't do it, but if I could do it, I'd do it just for the grinsies, is I would buy enough uranium shares of the Sprott Physical Uranium Trust, demand physical delivery of the actual like yellow cake, which I mean, they're not going to ship, but like whatever, just conceptually you could. And then I would gift it to Greta Thunberg. Like that's what I would do. Like here.
No. You have the misunderstanding of how the Sprott fund works. Sprott it's an ETN, so every dollar that you put in, they're just going to buy a pound of it. So
yeah, but you can't take delivery.
No, like, you can't, but they can. But whatever.
Yeah.
I love uranium. I think it is one of the greatest asymmetrical plays in our lifetime, and I've been heavily buying for. I don't know, Justin, when did we start talking about this? I mean, we were making videos on uranium a year and a half, 2 years ago. Whenever we started the channel, at least 2 years, I've loved uranium. My position's not as big as I would like. Every pullback, though, every single pullback, I will be buying because I think there's a situation where we could see moon-like stature on the uranium. Yeah. So yeah, Gabriel, I'm heavily invested as well. So how long do you think the squeeze will last, Justin?
This is going to be, I suspect it's going to be an extinction level event, which means it's going to be a massive threat to the system. Again, with Joshua, was it 2 months ago, Gensler put out that tweet saying, oh, by the way, we can freeze trading for up to 10 business days or whatever, right? Like, expect the system to spasm, expect the system to bitch, moan, and do everything it can. So the answer to your question is the squeeze will probably be relatively compressed, but like expect the compression to be halted out and to be stopped by like other like regulatory agencies or other things just coming in. Like, Klaus getting back to, the global pandemic, cyber attack or whatever. Like, they're going to pull out all the stops in order to get this thing to go through. So again, like I would say, like, play it cool, have some special cookies off to the side if that's your thing, from California or Colorado.
Worried about the tensions in Kazakhstan regarding that's bullish. So there's tensions in Kazakhstan, let's say. Kazakhstan's one of the largest uranium producers. The more tensions there are, the less uranium they're producing, therefore less supply. Again, also Russia has a lot of control of the uranium supply. That's probably going offline. It's bullish because less supply equals higher prices, along with demand, is going to be skyrocketing, not just from the Sprott Fund. Uranium is one of the cleanest energy sources in the world, if not the cleanest, and it is, I think, going to be one of the biggest, the biggest energies in the world. Well, not the global percentage is like 10% of energy. I think that's going to go up to 15%, 20% potentially, because it's so clean and the politicians are finally starting to recognize it for what it is. So it's yeah, Gabriel, I'm way too bullish on uranium. I could yeah, same here.
Yeah.
What are your thoughts on Alex Jones? I don't know. Oh, isn't he going through some shit right now? I have not done too much research on it. I don't follow Alex Jones too much. Justin, do you? I know that we are probably turning the frogs gay though.
Yeah, I do believe he's right on that or whatever, right? Now, like if I'm going into that realm, like there's a
Ooh.
I would generally follow my favorite letter of the alphabet. I'll just leave it at that. So
I don't know what that means. Pi5 won't since Pi5 won't have a MOAS party. Will you guys have one? Ooh, Justin, MOAS. Will we have a MOAS party?
Yeah, what we'll do is we'll rent out, the dumpster behind some Wendy's and see if the Dans will join us. So
honestly, I don't know. Yes, we'll do something. When MOAS, we'll try and conjure up something. It'll probably fail miserably, and it'll probably be me, Justin, and my mom, and we will bring cookies and have some pizza, but no one will be there. So we'll try and conjure up something. We will try.
Yeah, well, Josh just has to shave his hair, in order for MOAS to happen, and he's being very selfish by not doing it. So make sure that you all rage hate him on Twitter or whatever you do on Twitter to rage hate people. I don't know how much it works myself, but let's see. Can I come?
Yes,
sure.
Yes, you can come. Yeah, everyone can come. It will be. I bet Girk will be doing streams for him. Absolutely. Girk, he's just trolling. If he doesn't do streams, we'll force him. We'll go down to Brooklyn and we'll start his stream for him.
And the elevator doesn't break.
We do know the elevator was jammed deep into the floor, but so
bad.
If we were watching Pi5 when he was taking off his shirt, showing the shoulders for the run up, I'm sure when MOAS happens, we'll see the luscious calves.
Yeah, see the calves. Yeah, that's right. So in all seriousness, that I do not know, but if XRT, which I think State Street runs behind the scenes, were to do a recall, or these perks, that's a good question. I would assume that it would create problems for XRT in the sense that they would have to do something. And my assumption is in doing something, they would have to recall the shares. But again, this is a technical question, and I can talk about the psychology and high level shit, but I would just be guessing. But I would guess that it's harder for them to manage with it than if it didn't happen at all. So I see that as being inherently bullish. So.
Yeah, you better fly down, Phil. See, so XRT, I think it'll be much harder to manage short position. When this does happen, they'll probably have to do a share recall. I don't know exactly what will happen. Again, Pi5's probably the guy to go deep intricacies. We could look it up and probably get to the bottom of it, but on the top of my head, I personally do not know. We've been streaming for probably way too long. I'm surprised there's 34 people watching. I'm sure that I know all of them. Actually, no, because the guys in the chat, you guys are the real ones. We just like to communicate with you fellas. And what else would we be doing on a lonely Sunday night? Okay.
Pretty much.
I hope the VWAP hat will come off too. So I think that we will end it here. If there's any last questions, it will have to be for next week. So
I've got one final remark. The VWAP hat will come off, but the VWAP thong will come on. So that's how you have to think about that one. Eskimos, yeah. See, there we go. Okay, guys, I think that's
yeah, this will have.
I think it's a wrap. So
we'll try and do something with Pi5 pretty soon. Last time we tried to do something, he was getting teeth work. So I would love to. We could hopefully do a live stream with him one of these times. So thank you, fellas, and we'll do some shout outs like my boss, George Damon, All Nighter Hider, or AKA Consider the Logic. Thank you, Gabriel. I will hit you up back on Twitter. Anthony Court, Rocket, thank you very much. Oh, again, Phil C, thank you. Consider the Logic. Oh, shit. D's Perk, thank you very much. Dumb Money, thank you. Justin, thank you very much. All right, guys, we will see you on the next one. Justin, goodbye.
Take care.